Hey guys, what's going on? We are back. We are back. We are back. Yes, it's your boy MC Fire. We're tapping in, trying to get you guys locked in with these setups. This is a happy Friday. And Going into 2025. This is January the 3rd. So let's dive right in, guys. If you haven't already done your budgeting, done your goal list, and worked on like what you're going to do for your body, health, and wellness, definitely do that. Without further ado, let's hit these charts. We've got a couple things that we want to tap into on the mornings. Let's get in it. So essentially, we have a couple plays that actually we're able to develop and a couple setups that we want to look at today. We're going to go through it pretty quick. Just to recap, we do want to talk about the major indices always. We're going to tap into the SPY there. So if you've been watching SPY, you know that after the Fed chair meeting, it's been making the SPY a little heavier than normal, right? Ideally, we'd want to see a bounce. People were saying the SPY was a little extended, not really getting that going into that Fed chair meeting. It hadn't even got to 3 ATR, but it was just a very steady, nice uptrend. Taking the dips, you could take those buys pretty consistently and see nice, healthy profits. Here is ideal where that could also change. That could change, right? With it changing, if we have it, what would be the signs of it changing, right? If it goes up and it doesn't put in a higher high, that could be a sign that hey, we might be going sideways, or even people might try to get out ahead of any kind of recession and pull positions off the table. So we're watching this relatively closely. Remember, the Fed chair meeting is about the 50% candle. This 50% mark is kind of where I want to see us get out of hot water. But if you're noticing, we have a head and shoulders pattern forming here. If you're looking on the daily, I think I could let me see if we can mark that up for you guys. Right. So essentially, we have that item right there. We'll duplicate that. And then up here, we'll duplicate that. And right here. So your head and shoulders pattern is right there at that level. And so major breaks of, traditionally the neckline, it can be extremely dangerous for setups to the downside. Then if you see a neckline break, then a retest of the moving average could be in play for potential downside setups. So we can definitely watch that for changes in the SPY long term, right? Don't necessarily see that too often. If you look back historically, even this and its major pullback, this major pullback, when you think about it, really didn't your low uh, the major pivot low is here and it's making a higher pivot low. So it's not out of the realm of possibility that it could continue, even in something like in the most recent trend upwards. So as it's trending upwards, a major pullback could be in effect for a pivot low, a major pivot low. But what you want to see is, let's say, a break. Once it breaks, if it goes back up here and it fails to make a higher high, that's what we would see up here, right? If it breaks below, it could continue to go down a little bit, but if it comes back up and it fails to push a higher high like it did last week, definitely danger area. So we're watching that extremely closely. But we're going to keep to our rules, keep to our system. The system essentially is if you get a moving average cross to the downside, we are now in negative territory, and any subsequent green candles that show their head in kind of a in red territory on the week, then they can definitely be primed for a setup. So this is what's going on. That's what's going on with the SPY. That's kind of also what's going on with the Qs as well. So if you're in like heavily invested in a SPY, which the Qs make up a good portion of the SPY, same thing's kind of happening. SPY showing a little bit more strength relatively. And how I compare that is if you go back and look at the SPY. Right. Recent pullback has tested this pivot zone, right? So there's this pivot level at high there. and it has recently broken that at least a few times. Whereas on the Qs, it's a little different. So it did break that pivot level, but it is holding its trend line there. So for those who believe in trend lines as a trigger to trade, there's a good clause here for a continuation, but you'd have to see it maintain that trend line. If you start seeing it to break in the retest, as the theory goes, then the trend might change, and we could see that, and we'll be bringing that to you firsthand here for sure. um so let's go through a couple other things real quick. The VIX is your fear indicator. Essentially, the higher it is, the higher the market is uh, anticipating potentially some fear in the market, right? As of right now, it's 1767, and it's since decreased from that peak high at on the week of 1216. So that day, 1218, the Fed chair day, sent shock waves and fear in the market. You can see how the market reacted by the fear indicator. It got all the way up to 2835. It's a lot because the market doesn't necessarily like um, to be not bamboozled, but they don't like instability. So once you essentially say, okay, we're gonna have four cuts, interest rate cuts, and then you say, nope, we're gonna have two. The market cannot stand that. It is rough. So um, there might be some opportunities to trade the VIX in the future, like when you see stuff like this, and then make puts on VIX. That probably would have been a decent play. We might start bringing you some of those if we can set up a good setup for the VIX. There's some really good VIX trading strategies out there. Because when it gets into this trough, we're going to talk about the range of 13 down to like 11, 12, 11, 13, that area, then VIX probably will pop. It's everything can't cruise on cruise control like that forever. Um, but yeah, you've got the VIX, you've got the IWM. Right, we're gonna go look at the Russell here. The Russell really is my canary in the coal mine. Uh, below this pivot, below these multiple pivot levels. So you got one, two, and then it broke above, and now it's below that, and it has not gotten above in the last 2 weeks. That is concerning, right? So if the IWM starts to go negative, right? We've been watching this. This is the canary in the coal mine. Most people aren't talking about the IWM as a canary in the coal mine. This is a major indice, the Russell. If it cannot get above that level, and then we would have to see a major tick up in the Qs, which has already been holding up the market. Most people would surmise that the Magnificent Seven is making up a huge portion of our market. So, got to think about stuff like that, and like wealth concentration there in those terms. But you also got to consider that people invest in companies in the IWM. So this is a broader market, and if the broader market is struggling, you know you're gonna see some pain there for sure, and some volatility increase. All right, so let's get into some high quality plays. We're gonna start out with the in plays. You've got the XLK and the XLC. We got the XLK here and the XLC. So the good news is, right, these two both have a setup on them, right? And they're in strong uptrends. They've been in strong uptrends for a very, very, very long time. And so if we can get an XLK break above 23 or 235.09, if we can get a break above that, that'll be very, very good, right? You're seeing some orders kind of stack here between the levels of 231 and 236, but this setup candle has presented itself, and so we appreciate its presence because as you saw the last one, it presented itself, and the rip was pretty nasty back up to highs. It would have been a very, very nice play. You would have got in at 235 and promptly made a decision at 241. Again, would you guys be okay with a play running, $6? I think most people would be okay with that. So XOK doing pretty sweet and kind of doing what we expected it to do. If we get a return to that, this is essentially rotation here, but it's not too bad, right? Rotating from the highs down to around the 230 levels, and then rotating back up to the highs. We can take that all day. We don't feel bad about taking those rotational plays in the direction of the trend. It's when the trend changes that we'll have a problem, right? When it starts to look a little wonky and not get back up to highs, that's when we get a little concerned, right? Same thing, very similar to the XLC. Now, if you know anything about how we trade over here, the XLC, the XLK, and the XLF have been consistently operating at or above market. So if you go look at the bar charts, I think we might have those pulled up for you. I'm trying to see if we have that pulled up for you. If we don't, we'll pull it up for you. But if you go look at the bar charts, essentially those guys, those guys are your primary. Let me see if I pull it up for you real quick. Yeah, I'll pull it up. Let's do this. We're gonna get you the bar charts, guys. Bear with me. But essentially, if you pull up the bar charts, those guys have been consistently operating above um, the major indices SPY, right? I'll go ahead here. I got my quick list here. So it'll pull up for you. We're just going to show you this really quick. And industrials, consumer discretionary. Here recently, consumer discretionary has been ripping. Also, not to leave anything out, but consumer discretionary does not normally operate above. Actually, we'll highlight that first. Consumer discretionary does not normally operate above the market. So the fact that it did over the holidays tells you what? That consumer discretionary was a holiday play, right? I'll pull that out right here. So consumer discretionary as an ETF, right, doesn't normally operate above the market. Okay. And during November, December timeframe, it pops above, right, the SPY, right, which means that people are probably going out shopping, they're having a good time, YOLOing on their credit card. So now that we see the holidays are over, you're starting to see a significant drop in that. So consumer discretionary is definitely something you can look at potentially. We'll take a look at a deep dive on consumer discretionary on our Sunday video, but we're trying to get you guys kind of set up for the market right now. So that's pretty big right there. And then when you factor in, so let's go back to info and tech and the communication sector, the XLK, the XLC. So now that you have the XLK and XLC, they're tracking way above the market. So if we're gonna see a continue, an XLF, we'll throw that on there too. It's kind of tracking with the market. Here recently, also in November, has been tracking slightly above, but XLF, XLC, and XLK, if those guys are really kind of ripping to the upside all in unison, I can expect to see the market feel comfortable pushing upwards. If all three of those are up in unison, I can expect to see the market ripping upwards comfortably, right? If one is lagging or you're seeing an advance in one and a decline in the other, kind of be careful about SPY and just thinking that SPY is going to go to the upside, right? So as it stands right now from yesterday, you've got comm services moving to the upside, but info and tech kind of sliding relative, and then the financial sliding with the market. So just keep that in mind. I'm not necessarily looking for like a big rip rally if we can't get those out of the gate for the major indices. Okay. So if we're pulling back up the charts here, XLC, I like to see it get above that 98.04 level. 98.04 is the level we'd be looking at. And obviously stopping out at the low, this makes it a very clean and concise setup with $2 of risk there at 96.43. If it breaks below the low, we'll let it go. And it'll be right there with that rotational zone at 96.35. So if it goes below that, you're already looking at this rotational zone with a gap there as well. So you get to look at if it breaks, almost look at to fill that gap. But if it goes up, I would look for it to approach or at least rotate back to highs. Danger zone would be like maybe halfway, looking at fair value, right? XLK, very similar story. But the danger zone, believe it or not, is a little higher. So in the XLK, you've got a major pivot level over here that puts in your weekly kind of resistance. That weekly resistance is set from here and here. So we're looking to the left to kind of get a gauge on what's going to the right a little bit. And those two levels, the market respects that. So we're in a little bit of a head and shoulders pattern here. Here's your shoulder, here's your head over here, and then if it comes up, it could form another shoulder. That's the risk you're taking, right? So your first sign of danger, risk to reward rise, is almost a 1 to 1. It's a little risky because we typically like 2 to 1s, 3 to 1s, 10 to 1s, but a 1 to 1, that is about as bare as it gets. XLC, a little bit higher, a little bit more pronounced risk to reward ratio. So you're looking at more like a 1 to 4, like a 4 to 1, or close to a 5 to 1 on this one, right? So this is kind of more what you want to see. I'd rather see a break above in the XLC and take that with its strength. You got companies like Google and Meta in there, which is pretty sweet. What else we have? CEG. If you've been watching our channel for a minute, I just want to bring this guy into the fold, bring him to the front of the classroom, kind of show you guys, um, you know, not every setup is gonna happen right at the setup candle is gonna be perfect. Remember, we took this play, it didn't necessarily run, we got stopped out, and then it didn't end up going to fill the gap. So he's back in the news here, but I wanted to showcase that yes, stop outs do happen even with the setup, even with something like a gap here. It went up, came back down. We took the stop, it peekabooed our stop, and then it immediately ran to do what I thought it was going to do, which is fill the gap back um, essentially about a month ago. But now it is back in the news again. So we put an alert here that if it broke the high at 223.73 for CEG, that it could be potential play. The only problem is it was not within our time frame. We like typically for it to break that level or break our setup for the trigger, break our setup candle for the trigger in like 4 candles. So if it doesn't do that 4 or 5 candles, we pretty much let it go. Now, does that mean that you cannot still take the trade? Well, from a traditional standpoint, if it gets above the 8 period moving average and above the previous week's high, you're pretty much good to go. So right now, it's already broken above the 8 period moving average, and it was definitely way above the previous week's high. Now, how would I play this? It's kind of a set it and forget it kind of thing. So let's say you enter today, which is a Friday, then you would enter the play for 3 weeks, maybe targeting pivot highs or previous pivot highs for a decision that would be 227, or excuse me, 267.23 at that level, 267.23. But what would your stop out be if it breaks the low? Because of the wide range of that candle, uh, act accordingly. Use your risk as a total fire and forget, meaning that expect that whatever you are putting on the table to go to zero if you do get stopped out, to give it enough room to play out. You need your play to actually have room to play out. So don't risk more capital than you're willing to lose there. We also do have SoFi. So let's go take a look at our new add-on SoFi. SoFi came on the watch list because a lot of people out in the world, they really like this stock. And so we kind of want to trade a little bit with the trends, but we want to trade it our style. So SoFi is actually on the list for being in a strong uptrend through a setup candle, and now we have an opportunity to get into SoFi on a dip, not when it's in FOMO mode. Um, get into it when it makes the most sense to us to get in on a very good technical and a strategic level. Okay, so if we look this morning, what's SoFi doing? It's currently kind of treading water down here. So if it doesn't break above that mark of $15.10, wouldn't be looking to get in into SoFi, right? Now there is a theory that if you can break the 50% mark, but you got to think the 50% mark of the pivot, right? So the pivot is like 1541 from pivot high to pivot low, right? In the middle, it'd be 15, like 40, 41 ish, right? Um, so if it pulls back here, some people would say, "Oh yeah, that's a major candle. It pulls back 50%. It's good to go." No, you have to take it from the recent pivot high to pivot low. That is your move, right? You have to respect all of your sellers, and your top seller stopped started at 1668. That's when the last pivot seller, he got the best fill, got the best price, and then he just got paid all the way down. Okay, so it's just something to keep in mind. You don't want to get caught slipping here. So at minimum, it needs to break. Let me actually just get rid of this. At minimum, it needs to break above 1510 for me to consider it as a worthy trade. It also gets also within this rotational zone and has a higher probability of actually completing rotation back to pivot high, which is what we want, right? Um, One of my favorites, recently got into this again, same thing, been watching what has been making the news, what people are looking at. And here recently, it was in a nice little juicy squeeze there for about 2 weeks there. So 2 3 weeks, if you look on the weekly chart, this is the squeeze and what it looked like as it's pulling in. Very good uptrend on the weekly. We saw a setup candle, 1 2 3 4 5 on the fifth day, pushed, boom, right, and then there it goes. So on the fifth day, we got in, and it has since started running to the upside. Now you see how these red setup candles are here; they're bar coded. That's a bull flag all day. If you guys know anything about candlestick patterns, you have a nice a push, and then it starts kind of bar coding sideways right there off the push. You could see this potentially climb higher. It's a very strong bullish setup. Can't really don't know the probabilities for that one, but essentially really strong bullish setup. Already in the pre-market, it's already started to push to the upside. I don't know necessarily if it will continue that, but the market will open here pretty soon in about 7 minutes, so we'll find out. You also have we're looking at also XLRE. Now, I want to make a note of XLRE because XLRE, and when you look at the bar charts, is the one of the ETF said is struggling, right? The real estate sector. So the real estate sector, as you can see here, is now in a very clear downtrend. And there was a setup candle here. Now these are lagging indicators over here. So the trend being put in, you want to see more of a rip. That's kind of why we want to see more of a rip sometimes, because we want uh the trend to change and then the setup candle to happen in conjunction with it so we can take that play. But as you can see, downtrend, setup candle here, take the sell, nice 2 day rip, very, very nice. So that's swing trading 101 right there. It's absolutely flawless. So that's what we kind of want to see with a nice juicy blowout candle as it first danger area, completing rotation, make a decision, and then you could take a lot off the table here on the second blowout candle. It's now barcoding, but that still means that there is maybe some more juice room on the table, but I wouldn't take it longer than 3 ATR. Okay, I wouldn't take it more than 3 ATR there. We do have also the same thing, XLB in extreme sell-off territory or major already sold off territory, right? With this being a blowout candle. If you're in XLB, I would highly consider you looking at taking a little off the table if you haven't already, because it did enter in a downtrend, indicated by the weekly cross negative, and it just went straight down. Like it just no holds barred. So it just went boom. Even the setup candle here got washed and pushed to the downside there. So at 3 ATR by you. So just watch out for that. Follow through. I wouldn't look for much more follow through here. And you can almost see this as a reversion to the mean trade. We did have a reversion to the mean trade on. I think when we put it on. I think it's on UNH. Yeah, UNH is got a reversion to the mean trade. So we'll go look at United Health. Okay. Um, what do we got here? Right. Struggling to get back to the mean. Maybe the mean catches up and it just goes sideways. That can happen in reversion to the mean trades, but we're looking like if we're looking on the weekly, it tapped 3 ATR and through a setup candle there. If we have a buy bias, that's good news for us. So we went on and took the play against that setup candle, right? Um, and if it goes up to the moving average, that's kind of where we the A period to be exact, that's kind of where we're like, hey, that's the mean in these very, even in the most powerful trend, getting back to the 8 period moving average is reasonable. So boom, going back to the 8 period moving average on the 3 weeks ago, essentially, it did that, got back up to the 8, and then it started failing. That's kind of what we want to see. Like it got back up to the 8 period moving average on this move right here. These 2 days, that was it got back to the 8, and then threw a setup to the downside. Boom, right? Um, and then when you look at this, right? I'm hoping as it barcodes here that we see a pop back up to rotation. That'll complete your that'll essentially complete your move back to the rotational zone, and then we'll take the position off, right? Don't like to stay in up positions in a downtrend too much. I typically like to just take my profits and run, and not looking for too much there. But it's very well possible because when this thing pushes in this zone, it really gets going. So we're hoping that news subsides about it, and then we could see some potential buying happening. Also, the energy play that we talked about last week is in effect, right? We were watching energy going, we saw this USO into this tight wedge here, and it has since pushed at least to highs again. So potentially could see a major push to the upside for USO, a continuation. If you're in the wedge, shout out to you. Pre-market is already kind of pushing to the upside there. And yeah, I think it coincides with the XLE. Let's go take a peek at the XLE here. Yeah, a little bit of push there. So if there's some cross talk between between the two, it could definitely be a play, right? And if you're looking at rotation here, that's another thing. In the XLE, if you're looking at rotation, these levels at 85.46, definitely seen some major bounces off that, because if you, let's go pull out here and then zoom out here. Major rotations off the top here down to here, and then pushing back up there. So if it bounces, it could do the same thing, bounce off of here, and then have no problem rotating back up to highs. We will see, right? Unbalanced volume is looking a little, looking like it's pushing up to the upside a little bit, which is good. So buyers looking like they want to step in at the same rate on the upside at that level. So that's really good. One of our favorites has been selling off IRM. We could get a buy bias confirmation there as well. It is in negative territory, but we love IRM, and getting it in a discount for long term, strategic long term, like 10, 20 years is good, right? Averaging into this thing is would be pretty sweet. Oh, and another big one, BYD. So if you're a lover of the car company BYD, the Chinese automaker, they're coming out with really cheap cars. Car affordability right now is at a sticking point, so it's going to be a real problem. As a contender, BYD is just able to make some really cheap cars, and so there's a setup candle there. If it gets above 34, 45, there you go. An uptrend, pulled back kind of to the 21, and if it starts setting up like that, that's flawless for us. So, guys, thank you so very much. We appreciate your guys' time and expertise for tapping into the markets. We really want you guys to know that no matter what the news is saying, anything like that, you guys got to make sure to stay positive, have a plan, and just trade what you guys are seeing on the charts, not really fall into FOMO. So that's the market open. We'll tap in with you guys soon. Have a good day and goodbye. Peace.